Everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about the Russia invasion of Ukraine and the impact on the stock market. We'll also answer the question of the day, whether or not the housing price increase as well as the used car price increase is temporary or here to stay. Before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. It is being reported that Russia sent peacekeeping troops into Ukraine. Is this an act of war, and how do you think the markets will react?
Well, good morning, Allison, and thank you for that intro. And I'm sure everyone's taken notice that it's February 22nd of 2022. So that's a lot of twos going on. People are saying set your alarm for like 2:22 today to take a picture of it this afternoon. I don't know. I don't. Other than being interesting, I don't know that I will do that. But I will say that it's interesting that it's on a Tuesday, right? Tuesday. Okay. So Ukraine invaded Russia invaded Ukraine this weekend. And, we've been expecting this. We've heard from the National Security Advisor that this was expected any day now. So that any day now has finally come. So technically, they sent peacekeeping troops in. They did send them in as war machines, tanks, that sort of things. So really, is it an act of war? Technically, I suppose, according to the international law of armed conflict, no. But really, everybody understands it's certainly an act of aggression. It's been a largely forecasted act of aggression, and it's going to be met with, a U.S. and NATO / European / worldwide response to the act of aggression. So, are we at war? Well, probably not, right? So, tensions and aggressions are probably the best way to use the terminology there. So, how's the market reacting? Well, this is a perfect example of how you really don't want to hop in and overreact to market news. You can see the futures right now. They're on CNBC.com. Down slightly in the red. Actually, almost back to the green. Really, from where they were earlier. But yeah, it was down a couple. When I woke up this morning, I got up early because I was expecting this to be an awful day today. So let me show you the chart of where things were not too long ago. The Nasdaq was down almost 3%. So when you really look at these screens across, there's a lot going on here. You have the SPY off to the left, the S&P 500, then the NASDAQ, the QQQ is right here, right next to it. So really you can see that when the market opened this morning, things were down huge. So if you got up early and decided that the world is ending, it's time to freak out and sell all your stocks, you missed this entire 2% move back higher. So largely the market is reset to where it's going to open, like I just showed you, back to normal. Of note, while we have it on here, for some reason, Black Rifle Coffee skyrocketed up to $27.89. That's certainly not related to the Russia-Ukraine situation. But when you zoom out and look at where we are as a market, we're kind of due for this big green day, and I thought we were going to get it Friday, and that's it's kind of technical, but we're back down here in the congestion area that we had, 3 weeks ago? So we're really kind of due for a bounce. If you get down here at the bottom and look at the indicators, they say that it's going to be, we're time for a few green days in a row. Well, so I think that's what we're going to see today. So despite the event actually happening, it's buy the rumor, sell the news, or sell the rumor, buy the news. Kind of mentality. So we've expected this Russia invasion of Ukraine any day now, and it's finally here. And we'll see what the U.S. comes up with. It'll be financial. There may be a cyber piece to some things we do. We may or may not hear about that in the news, but there are certainly things going to take place. And this is going to dominate the news cycle for probably the 2014 invasion where they annexed the Crimea. I keep remember to look that up to see how that's pronounced. But that portion of Ukraine, expect that to happen again, whether they actually get a full annex of this portion that they're targeting or they don't. I think we're going to see probably about a 2-month sort of thing. That's what we saw last time. And largely the market did not react over time. day-to-day reactions, but certainly nothing notable over time from 2014. So I'm not even going to show you that chart. So I think, the things that are acting on the market, you have Russian invasion of Ukraine, but you also have inflation raging here in the U.S. And you have the Fed that's, going to be targeting that with interest rate hikes. All of that is going to largely play, a bigger factor in where the market goes from here. And of course, we have earnings, and the companies have been doing great. So overall, I would say the reaction to the Russian invasion of Ukraine is largely baked in, and I don't really anticipate a huge move to the downside.
Switching to our question of the day, a client asked this question: based on the rapid increases in housing and used car prices, do you anticipate these going back to norms, maybe regression to the mean in the next few years?
Sure, that's a great question. And of course, there's two sides of that. So we'll talk about the home price increases first. So when you think of, just like we just talked about market forces and which one's going to win out over time, certainly when you think of home prices, there's different forces that are acting on those prices. First of all, there's where you live. All real estate is local. That's what you've heard that, whether you own property in rural Wyoming or downtown San Francisco, obviously things are going to appreciate and potentially depreciate, due to different circumstances there. So, we're here in Austin for Allie and I. So, we've benefited significantly from the exodus from California and the moving in of tech. So housing prices here have skyrocketed. And I would say specific to the Austin area, I don't really see them resetting or reverting to the mean, as the initial person who asked the question said. Reversion to the mean is where things overshoot to the upside and they kind of settle back in. I really don't see that here in the Austin area. I would say other super popular areas, the Denver area, or Arizona, where some of the bigger cities there are facing some of the exodus from California. The people are moving in; they're all cash buyers. They're used to paying a lot more than what we pay around here, so that's helping things move up. But I would say, nationwide, you have some folks moving around to popular areas. But nationwide, particularly where this client lives, it's a nice area, but it's not necessarily exploding like some of the others. And in those situations, there is a significant headwind coming up for the housing market. So we've faced a tailwind for really 15 years now, since the housing crisis, 2007 through 2009, and then the quantitative easing we had out of that. Interest rates have been at zero or near zero for over a decade now. We've tried to raise them in the past and it's not been able to stick, so they go right back to zero. So when you think of your 30-year mortgage, you're thinking 3% and 15 years at 2%. You're just not going to see those numbers anymore. So how does that affect the price of your house? You're like, well, that doesn't affect me. Well, it doesn't affect you, the house owner, but it certainly affects those that are trying to buy. As you know, if you've done a refinance or tried to buy recently, that you have to qualify and you have to meet the income ratios. And well, the issue with even a quarter point uptick in the interest rate, 25 basis points, can move that monthly payment up and affect those ratios. So if you're right at the limit, you're scraping to buy a home for the first time, or you're looking to move up to a bigger home, or you entered retirement and now your income has come down. I ran into that situation when I retired from the military, where my income had dropped. Ooh, weird, right? I have assets, but I don't have the income that I was used to having. So that's how interest rates can affect that. So when you think of what's it going to affect, is it going to affect the normal single family home, the 1,500 to 1,800 square foot, perfect American home, if you will? Probably not as much as it will the higher end home. So if you're sitting in a 4,000 or 5,000 foot home, good on you. Congrats for that, and it appreciating, of course. But when you turn around to sell that, you're going to potentially run into buyers, not as many buyers out there as there have been in the past. So that's what I think for the housing market, is that it'll settle down some in areas that aren't on fire. If it's an area that's on fire, I think we are resetting and establishing a floor. The second question there, Allison, about the cars. You're a car owner, and I remember Allie came in and said to me one day, it's like, hey, we could get more for our car now than when we paid for it. right? And I've gotten texts and emails about, buying my used cars, that sort of thing. All that's true. And it's kind of crazy, right? Nobody really expected that. Is all of a sudden, there's chip shortage issues and the used car prices skyrocket. Well, that's certainly here to stay, at least for the short term. That's not as predictable as the housing market, which is not even all that predictable. But I think it's a complete crapshoot with the car market of you just don't know what's going to happen. If you caught the story over late last week about the $450 million of Porsches and Lamborghinis and Audis that are on that ship that started fire and it's been abandoned, we may lose all of those cars as well. That's not may not necessarily move the needle, but certainly when you're in a world that's hurting for used cars, any reduction in the used car supply is going to be affecting the market. So, overall, I would say, if you have to buy a car for transportation, buy a car, right? You just pay whatever the market supports. But if you don't have to buy right now, I would be more inclined just to wait this one out and try to buy a little bit further down the road. No crystal ball is when that's going to happen, but I would certainly try to wait it out for a better price.
Thank you everyone for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices and at ankerstarwealth.com. That's all we have for today's show. I'm Allison Ankerstar and we'll see you back here tomorrow.